Thanks everyone for being here. I mean, that last panel was fantastic. And I mean, I learned a lot about it. I learned a lot about the details of some of the mineral occurrences in Canada's north. Where I came at this from, Anne and I were chatting, and I mean, I am incredibly, in the last year, I have gotten more and more interested in critical minerals. Maybe I'm a little behind the curve on that. But it's sort of, it's a relative thing. In the mining industry, it's very easy to be interested in gold, right? Gold is the thing that's forward all the time. And the more time I spend thinking about it, the more time, or the more interested I am in these metals instead. And so I wanted to talk about that, about why that's the case, and then the role that the North might play in that, sort of the opportunity that is unfolding, because the Green Revolution is creating an absolute paradigm shift in demand for some of these, from a lot of these metals. And when there's a paradigm shift in demand, then there are new types of opportunities. And so I think that, so that's what I want to talk about today, and hopefully I can add some information to the conversation. Perhaps you already know all of it anyways. So this is, I mean, we've all seen these sorts of charts, but I think they're important to look at on a reasonably regular basis to remind ourselves of just what an impact the Green Revolution is having on the metals that we've, that we know and love. I mean, you look at those bubbles at the bottom, and the increases are just dramatic. I mean, copper is the PhD of metals because it's so important for growth and it cycles with world economies. And yet demand for copper is exploding. I think lithium is one that I'll talk about a little bit. I mean, the lithium market was pretty tiny before EVs came along, before the electrification revolution came along, because we didn't use it for that many things. It was in ceramics and it was in some specialized applications, but it was actually a pretty small industry, and so a few players could fill the need, and that was that. And now lithium demand is just ballooning. And when that happens, the ways that the opportunity to take those things out of the earth shifts, right? The ways that we have been doing it are insufficient, and that means that new ways become an opportunity. And the fact is, there's also been this confluence of factors in the last decade, and I can use copper as a very easy example here. So in 2 years, I think it might even be my next slide. There we go. In 2 years, the middle of this decade, we are facing the largest copper deficit that the copper market has ever seen, right? That's a big statement for the PhD of metals that is essential for growth. And we've seen this coming for quite a few years now, but there has been, and the degree of growth in the copper market, in copper demand that is happening, is very parallel to the copper demand growth that we saw in the early 2000s through the industrialization of China. The thing that I really want to say is that when that happened in the 2000s, as soon as it became apparent, accepted that copper demand was growing so dramatically, the supply response happened. It happened like in lockstep with the realization of the demand growth. Copper miners permitted projects. They built projects. Capital flowed into the space because this was an opportunity. And so it all happened. We are in a different world now for a few reasons. One of them is it takes a very, very long time to permit a mine now in most parts of the world. I mean, back in 2003, did it take 6 months to 2.5 years to permit a mine? I'm ballparking, but like that was the kind of time frame that it took to permit a mine 20 years ago. Now it is 10 times that. I mean, maybe not 10 times 2.5 years, but I mean, the numbers are a lot longer, right? So the permitting process has clearly impeded the supply response. But also, management at major miners is very conservative. They screwed up in a major way in the last bull market. They did not provide their investors with returns. And so they're incredibly conservative. So there's been very limited aggression on the part of even copper miners to step forward and say, okay, we are going to build to fill this supply gap. They're more interested in, I guess, a higher copper price and making more money, which is a corporate decision, but it means that the supply response is not happening. And then you put that, and then layering on top of all of that is a lack of investor interest, right? the base metals have done better than gold, but nonetheless, we haven't seen the kind of investor interest in miners that we have seen in the metals. And so that ties into everything to do with interest in ESG and the perceptions of how ESG relates to mining, but also it relates to just the capital markets and how they've been on a tear especially since COVID, but really since the great financial crisis, since the Fed stepped in and backstopped risk and said, we're not going to let the markets crash. And then all of a sudden, all kinds of things became, guaranteed return investments. And so people didn't feel the need to sort of go out on a limb and invest in copper because it was a concept that makes sense for the future. Instead, they just bought indexes and, I don't know, monkey NFTs or something. So all of these things really have come together. A lack of capital interest in the space, so there's no investor money, extreme conservatism on the part of the major miners, and very long permitting timelines have come together to mean there's been no supply response to the copper deficit that's right around the corner. And I'm using copper as an example, but I'm just using copper as an example. This very similar things or the same things can be said about many of the metals that we need for this green revolution, which is going to happen no matter what happens to the markets and interest rates and whatnot over the next little while. And so the only answer is significantly higher prices. And of course, when there's significantly higher prices, all of a sudden there's lots of new opportunities to extract metals from the ground. The permitting timelines will remain real, but higher prices create new opportunities. I have gone through a couple of the metals here. I've tried to use some of the biggies, copper and nickel being obviously major metals. I think it is really interesting, quotes like, no amount of capital can create new nickel mines when they're needed by 2024. Like it's too late. We've already put ourselves too far behind the 8 ball. We can't get there. And nickel is another one. Obviously, we had a significant nickel market, but the vast majority of the nickel market always went to stainless steel. And all of a sudden, there's this huge new need for nickel because whatever other chemistry is going on in the battery, it's a nickel battery, really. And so you can see all those yellow bars that are on top of the gray bars in the top chart there. Those are the green bars that are changing the nickel market, right? This is what I mean by a paradigm shift. You're like doubling the nickel market in, over the next 10 years from a market that hadn't changed that much for a long time. It had grown with population, essentially, right? So these paradigm shifts are really, really interesting. And of course, each of these metals could be a 20-minute talk on its own because they all have their own details and their own requirements and all of that. But I'm just trying to paint a picture of the level of demand here. Silver. Another one where I think some of the numbers can be quite surprising in their scale. So silver, solar panels, right? China certainly dominates solar panel manufacturing and technology. Of late, it's become apparent that they are really increasing the amount of silver that they use in those silver panels. Like in the next generation, it's going to use 50% more. The generation after that, it's going to use 150% more. Okay, so those are significant increases. And they're going to do that because the efficiency of those solar panels is going to go up enough to justify the cost. Okay, that's part of the green revolution. We understand technology better, we progress in our understanding of it, and we change how we do it. But solar power today, using today's version of solar panels, uses about 11% of the silver supply. The International Energy Association projects that using today's version of solar panels, we would increase solar power 9-fold by 2030. So even if the technology didn't change, today's version of solar panels would use up the entire silver supply by the end of this decade. But China says it's actually going to need way more than that, 50 to 150% more per panel. This is the kind of, we're nowhere near producing enough silver to satisfy that level of demand, right? Uranium. I mean, I'm a big uranium bull. Nuclear power is surging. It had been growing, boosted primarily by China. Then the Russian Revolution had this interesting effect, or the Russian Revolution, that was a weird thing to say. The Russian war, the Russian invasion, had this interesting side effect of propelling that nuclear resurgence once again to the fore, right? Obviously, Europe needs to diversify away from Russian oil and gas. What is the answer? The answer has always been nuclear power. So it was sort of the spark that the fire needed. I think a lot of the understanding, the base of understanding was clearly there that nuclear was the answer, but it's hard to promote nuclear for lots of historic population reasons. But we were close to a tipping point anyways, and then we got this really specific reason to re-embrace nuclear. And that all happened right as it had become blatantly clear that, guess what? I sound like the boy who cried wolf. There is nowhere near enough uranium to feed demand over the next decade. And, so the only answer for all of these is much higher prices needed to incentivize new mines. I mentioned lithium. I mean, the numbers here are staggering. The recent estimate from Benchmark, who are the leaders in understanding lithium, not Goldman Sachs, if anyone's wondering. Benchmark are the leaders in understanding lithium. And they figure that the lithium industry needs as much as $42 billion of investment to meet demand by the end of the decade, right? These are very, very, very big numbers. And yes, the lithium price has gone absolutely nuts over the last year. I'm not saying that lithium is going to stay at the prices that it's at right now. It will settle down from those prices. Overreaction to these kinds of things is part of how these cycles work. But nonetheless, the lithium supply deficit is very real, and the amount of capital that's needed to come in is very real. And lithium also faces those same constraints that I mentioned for copper, right? And they've had more capital investment, but it's very difficult to permit the new mines, and management has remained conservative on building them. I feel like I just have to point. There we go. Those are some of the bigger metals in the critical category. There's obviously so many metals, I wouldn't pretend to try to list them or touch on them all. I put that table in there that we've all seen this before, but the content in a conventional car versus an EV as a reminder of how much this is changing. I mean, there's a whole bunch there that you don't put any of them in a conventional car. You don't put any graphite or nickel or cobalt or lithium or rare earths or really, well, I guess there's not much zinc or others. So none of those go in a conventional car. And yet you need a big pile of it for an EV. And then the other ones that you did need in a conventional car, copper and manganese, guess what? You need double or more than double in the EV, right? This is why this is such a paradigm shift. The thing with smaller markets is that they're going to be volatile, right? And I've put a price chart on there for vanadium. I've put a price chart on there for cobalt. This is just examples of how these small markets, they're oddly traded. You can't just like go and get exposure very easily, through a New York Stock Exchange listing or something. They're very small markets. They're opaque, and so it can be difficult to get exposure, and it can be difficult to understand what's happening, and so you can get these real price spikes. So there's definitely opportunity in these markets, but for the investor, you might need to be a little bit more, enter with a slightly more cautious footing. I don't need to speak to this crowd really about Canada's mineral blessing. The panel before me did a fantastic job of doing precisely that. What I think is important to underline is how the paradigm shift will make that blessing, will bring it into focus. So again, take lithium as an example. Lithium was always supplied by a few major producers. There were the brine operators in South America. There were a few hard rock operators in Australia. They supplied all the lithium the world needed. Done. Everyone knew that there was tons of pegmatite showings all through northern Quebec and Alberta and into the Northern Territories. Those are well known, but nobody ever bothered doing anything with them because they didn't need to. The lithium market was supplied. Well, the lithium market is no longer supplied. And so all of a sudden, those become very interesting. And so will it be like the sort of diamond rush that happened when it was the realization that there were diamondiferous kimberlites? It could be. I don't know. There is that kind of potential when you have this kind of paradigm shift in demand. It opens the doors for new opportunity. And that's what I mean when I keep saying that. It's a sort of an odd way of saying it. But I think that there will be interest in this mineral blessing, that real economic, tangible interest in this mineral blessing that has not existed before because the needs have suddenly become so significant. And of course, the thing with the North has always been, well, how expensive is it? How can you get up there and whatnot? What's really important is governments and populations in the North leaning in. And I just grabbed, I know this is Northern Ontario and Northern Quebec, but it also applies to the Northern Territories. There's real leaning in happening here, right? There's billions of dollars being committed so that these sorts of opportunities can be capitalized upon. And so when you put those things together, then you suddenly have a dramatic opportunity, I think. And I think another factor that really plays here, and the last panel mentioned it at the end as well, is that mining will always struggle for love, right? Digging big holes in the ground is always going to be a difficult sell, no matter the thing that you are extracting from said holes. But I'm sensing a shift already in investor interest in mining as the necessity of metals in the green revolution just gets so obvious. Like, it just gets to the point where you can no longer ignore that we need more copper, that recycling batteries isn't going to provide the nickel and lithium that we need. Like, it doesn't even touch it, right? And so as that realization slowly grows through investors, I think mining becomes more palatable, which addresses one of those first three impediments that we've had to the supply response, right? Which is a lack of capital interest. If we can have more investors think that mining is good, or even just palatable, I'll go with palatable, then that helps capital flow into the space. And that is one of the big things that we need for these supply responses to have. And of course, the palatable or even likable aspect of mining is the reason to build is green, that we cannot decarbonize without critical minerals. And of course, also significant evolution over recent decades in how mines are built. We all are aware of the changes in how we approach mine building, how we approach relations with local communities and First Nations, how we approach impact, and how we approach water usage. These things are very real. They have changed dramatically. Again, that's a story that is slow to permeate through an investing population. Old perceptions stick, but it is permeating. And I think these things hand in hand will continue to make progress in the investing population, which will help with that missing critical piece, which has been investment capital. So I also think that there is, and maybe I'm too much of like a mining investor, and so I come to these events and everyone's always obsessed with gold first and then everything else second. And so then I'm always like, well, we need people to not care about gold as much for this to work. I don't know if that's really true, because we're not trying to transform a mining population or a gold population into a critical minerals population. But I do, for those who are interested in mining and have perhaps gravitated to gold recently, I have experienced a shift in the last year where I am not as interested in gold because, first of all, it's not necessary. And secondly, in the way that these critical minerals are for the greening of the world. And secondly, the monetary and economic cycles that drove gold, that has always been, right? Gold is a monetary and economic cycle thing. Well, the way the Fed works these days, it stops monetary and economic cycles. So just the whole rationale for gold is changed. It's shifted. The fact that the Fed backstops risk means that gold stocks don't have the unique appeal in terms of return on risk that they used to have. They used to be unique in that. And now, like I say, you can buy monkey NFTs. Well, at least last year, you could buy monkey NFTs, and they would give you that kind of risk return thing. And so I think critical minerals really work in today's investor landscape in a way that gold doesn't fit, at least at this moment in time. We'll see how things progress through the current economic storm. But I do think that supports critical minerals, and they just have their base of support, their rationale for doing well is so much more fundamental than gold, that I think that really works in everyone's favor. And that is all I have to say about that. I don't have a timer, so I have no idea how long I spoke for, but hopefully that was neither too long nor too short. Thank you so much.